Hey folks, Dan Frio here with your real estate news for this April 22nd, 2026. So last night, the White House issued a ceasefire with Iran. That's causing the markets to rally this morning. So that's our major news for today. We're going to show you how that is going to affect mortgage rates, but there's also more to this. We're going to look at oil. We're going to look at inflation. We're going to look at the jobs reports. And then we're going to look at what the Federal Reserve is expected to do next week. Because I don't know if you realize, the Federal Reserve's meeting next week. What are they going to do? We're going to talk about all that and more to try to figure out what in the heck's going to go on with these today and the whys behind it. So folks, my name is Dan Frio. I'm a federally licensed mortgage loan officer. I'm here to help you guys out and try to figure out what's going on with mortgage rates and the whys behind it. And then at the end of this video, if you need some help with a mortgage, I'd love to be able to help you out. My slogan's one application, one credit pool. We're going to compare your loan to almost 40 lenders. How? Well, I'll give you that at the end of this video. You're for these. So let's get to it. So last night, what happened is people were going to say, okay, here's the taco trade again. But President Trump came in and said, okay, let's have a ceasefire right now until we can actually negotiate with the people in power. So right now, the markets are rallying off of this. But that's not the only good news for today. So let's get over to the economic calendar. But the first thing I want to do each day is I want to start with the chart. Okay, so what I monitor as a mortgage advisor is this right through here. It's a mortgage bond. All you have to understand is that number right up through there. If it's green, that's good. That means mortgage rates are going to get better. This is what's happening so far today. So earlier in the morning when I logged in, we were up about 13. Then we were up about 5, and now we're starting to rally again. So we're going to start each day with the chart, and then we're going to end the day to show you where the direction of this is, and I'll explain to you what's going to happen for the day. But the first thing we want to look at is right through here. We want to look at oil. So during the conflict, I keep saying, okay, monitor oil, because oil is going to dictate everything, because it's basically in everything. So if you see oil prices going up, and we hit $120 a barrel recently, and so when you see oil prices going up, you're going to see inflation coming up. Even the Federal Reserve came out 2 weeks ago and said, okay, during this conflict, we know oil is going to rally up because of it, and so we're going to kind of pull out those numbers when we're looking at everything. When they're doing that, it's called core. So when economists look at some numbers and they want to kind of say, okay, how does energy play a role in this? When they strip out that number, they call it a core number, like inflation. Well, inflation's about 3%, but the core inflation strips out food and energy is lower than that. So hopefully you understand that when people are using that terminology. So right now we're looking at oil. It's up $1. It's over $91 a barrel. It was $120 a barrel, but it also was $60 a barrel recently. So $90 a barrel is somewhat inflated, but it is up today. So why are the markets really rallying? Is it the ceasefire? Is it the oil prices are up? No, that wouldn't be it. Well, let's get over to the economic calendar and see, is there anything in the agenda here that could affect things? So yesterday we had retail sales, and that showed really good numbers. It says the consumer spending, and they're spending a little more than they should. And then today we got crude oil inventories. They're not coming out till 10:30. So what's actually causing the markets to really rally? Well, it's a ceasefire, and it's also earnings reports. You realize we have 90 companies coming out with earnings reports in the next 2 weeks. That's 90 of the top 500 companies in the country. So if you look at the earnings reports, you can go to earningshub.com and just look at the earnings reports. Over my head, these are 18 companies that came out with their earnings reports yesterday. 18 met or exceeded. 2 didn't. They're saying earnings reports right now are exceeding expectations, even with tariffs and even with these energy prices. Go figure. Okay, so that's what's really causing the markets to react right now. So we want to focus in on each day. You want to focus in on where oil's going. Usually if oil's going up, that's bad news. Right now, the ceasefire is actually causing the really good news as well as the earnings reports. So if you're a homeowner, home buyer, how do you use all this information to say, okay, Dan, I'm looking to buy, or looking to build. What should I do? Well, let's get over to a section I want to call lock or float. So what should you do if you're buying, in the next 30, 60, 90 days? Well, if you're buying within 30 days, just lock in. Don't go through all this volatility. It'll drive you nuts. But if you're going over 30 days, let's look at this. In 30 days, we're going to have probably a new Fed chair. He's going to probably be on the side of cutting rates, not because he's a Trumper, and a lot of you guys are going to say that, but even the Fed came out and said, if you pull out the energy prices in the inflation numbers, actually inflation is coming down. And then if you look at the jobs report numbers, any unemployment rate under 5% is full employment. So if you look at what the Federal Reserve looks at, you go through here, and here it is. So we have the PCE, which is inflation. It's at 2.8, and it's actually over 3. And they're saying, okay, this needs to be 2. Well, they're even coming out and saying, okay, this might get to 2 as soon as you pull out the oil at the prices that it is. Okay. And then the unemployment numbers, last reading actually ticked down. Okay, so you have a great jobs report number. You have inflation that's higher than expected, but even they're coming out saying, okay, most of this is due to oil. So what would you do? So I would be in the tune of maybe cutting down the road. So let's get over and see what the Federal Reserve's most likely going to do, because they're coming in next week. We'll have a live event right after this because I want to show you guys how the markets react to this. But in 7 days, the Federal Reserve is going to come out. They're not going to do anything. I don't know if this ever goes to 100%, but they're not going to cut rates or do anything at this meeting. This chart is actually saying they're not going to do anything in 2026. Heck, they're not going to do anything until the maybe mid part of 2027. I'm not saying that. I'm going to say they're going to cut right in through here. But as you guys know, just because the Federal Reserve cuts rates doesn't mean mortgage rates are going to go down. If you've been following me for years, in 2023, the Fed cut for the first time in a long time. They cut 0.5%. Mortgage rates went up almost 1.4% within a week. There's not a huge correlation there. So what should you do? Well, let's get back to it. If you're closing over 30 days or building, you should be okay. Here's what I would do. I would get pre-approved. Make sure you use us. I'm licensed in all the states as well as Puerto Rico, and we use over 40 different banks to help us make sure you're getting the best rates and the best service in the country. But here's what I would do. I would get pre-approved. And at a rate of, let's get over to see where rates are today. Rates are about 6.33. Get approved at 6.75. You might be saying, Dan, why? Well, if you can afford a payment at 6.75, you're probably in pretty good shape. If you can't, you might want to think twice about buying that house. So now that's what I'm talking about, home buyers. What if you're a homeowner? What should you do? Well, I got a tool right through here, and you can check out a lot of the tools we have down below. We have this right through here. Are you buried in debt? I don't want to make you put more debt on your home, but would it be prudent to maybe use the equity in your house to do that? Maybe, maybe not. Well, go to our website. It's called debtrelief.therateupdate.com. The link's down below. You can put in all your information. AI will actually determine, should you refinance your house now? Maybe just at a lower rate to save some money? Should you consolidate your debt into a new mortgage or maybe a home equity loan? Or should you just keep exactly the way you have it right now? This tool will do all that and more for you. So my expectations are, folks, over the next 30 days, just lock in. There's going to be some volatility here. I'm still saying mortgage rates will be in the range of about 6.25 to 6.5. Over the long term, I'm saying I'm going to go back to my old predictions. Once the Iranian conflict ceases and you have oil prices stabilize, I'm going back to my old forecast of 5.875 to 6.375. So I don't see any huge spikes in the equation coming up. There's no need for it. There's no reason for it. And I'm actually expecting mortgage rates to be stable right through here. And as long as there's a ceasefire and it remains and we can have some stability. But if not, if there is war that's actually declared, I'll be tuning in every day to even myself to figure out what's going to go on at that point. So that's it for today, folks. So let's go back to the chart. We're at 9 ticks, so it's staying steady. We need it right about 10 to really start moving rates. But if you want to find out more about rates, more about the equity markets and more, just visit the command.therateupdate.com. You can get rates right through here. You can track the MBS market, the 10-year Treasury, the news for the day, what mortgage rates trends are doing with the snapshots of each day, because I usually come in and go over, okay, here's what the Dow Jones is doing, the S&P, the NASDAQ, oil prices, and the all the Federal Reserve information that you need. So folks, my goal today is, or my expectations are, mortgage rates are going to be steady. I don't see mortgage rates changing much. There's no economic news. Tomorrow we're going to have a jobs report number, at least an initial jobs report number out. I'm not expecting any huge shock and all there either. So I think we're going to have stability over the next few days until we have more resolutions on the Iranian conflict. So to stay tuned on that information and up to date on mortgage rates and the real estate news, make sure you subscribe right down over there if you have not yet. And also, if you're a homeowner, check out our Rate Watch 2.2 tool we have right up through there, where you can plug in your mortgage information and we'll track the mortgage rates and your payments for you. So if mortgage rates hit a certain percent where you want to maybe possibly look at refinancing, or you can even put in there saying, Dan, when my rate, you can save me $200, $300, maybe $500 on my mortgage or payment, let me know. You can put all that information in there and more. So check it out. But that is it for today, folks. MBSs are up 11 ticks. Stocks are going to be up for today, but mortgage rates are going to be pretty steady. So watch the news, watch the Iranian conflict, and that's what's going to dictate the markets. Thanks for watching. I'll see you tomorrow. Bye-bye.